Hey, good evening, everybody. Ken at Tortoise Capital. This is the weekly, I should say, the nightly strategy podcast for Friday night. I will typically do another one on Sunday. I may do one tomorrow after we get the daily reports done and everything. And we'll get that sorted out. Just a second, Martin. Not sure, Martin. Not sure why that's the case. There probably is. I mean, yeah, I don't see one handy. I'll fiddle with it over the weekend. All right, so we'll just start with where we were yesterday. So yesterday, we'd had the fourth day up in a row, or third day up in a row. We had a day one, Tuesday or Monday was a nice reversal intraday, and then we were near the top of the 10-day high going into a Friday. There was not much on the auto framer, and a lot of these numbers were coming back into more realistic trade frames. So we had a lot of the usual suspects were sorted out pretty well. Today was kind of a grinding day, so I'm just going to go right into it. So last night I talked about a couple, four different symbols that are outside of my normal bailiwick. My brother was interested and had some other people interested as well. Some opportunity style trades. So one of them was Tilray. This is a CBD manufacturer, and this thing IPO'd about 6 months ago or so at 100, or no, was it 25? I guess at 25 it went to 120, came down to 2, and then yesterday was up 50%. So I was ready to trade this one. Let me see if we can just kind of see what was going on. Personal, my brother. Yeah, so Tilray had been an interesting. Yeah. Had IPO'd down around here at 25, ran up as far as 200, I guess. Oh, went 200 all the way down to about 20, and then during the collapse it went down to 2. Martin, this is in that whole marijuana thing. You may remember at the last summer we were talking about the whole marijuana, the MJ ETF, which plays that whole sector. But meanwhile, this thing had bottomed out around 2.25, and then had this little play. And I'm going to slap him around for not getting a hold of me sooner, because I'd be interested in this thing around 450. But yesterday it was up like 50%. It went from, it had closed at 4.5 and went as high as like 9. So I was prepared to trade it if it broke out of that box, above the blue line in that box. So it did that today. So I was already ready to trade that. The other ones we looked at were Ruger, and this was a gun manufacturer. No, it's not showing. Yeah. Okay. So there's so Ruger had a lot more volatile. Doesn't have the same kind of panache as Tilray, but it's gone from 55 down to 40, and he kind of liked it, so I was looking at that one. That was not as exciting. Litton was one he was interested in. These are guys that are big into batteries, and so they track Tesla pretty close. So when Tesla's doing really well, then Litton does pretty well. Yeah, and so it was in this sell-off phase as well, where it had gone from 33 like everything else down to 17, so 50% haircut, and then had started to rebound. I was interested in if it came out of this to the upside, but it didn't, so I didn't play that one today. And then C-Web is a China internet bull, so you figure if they're going to go to more of a distributed work at home shift, that these guys ought to do well. They've gone from 16 to 24. They came out of the I was looking to play them long, but they suffered along with everything else today. So really, the only one that was that I tried was Tillery and Ruger. So just for, and I talked about those last night. So just for completing the record, so Tillery, it was a gap up. I bought the hybrid frog. It went way high, and then came back, and I just scratched it because I couldn't stand it. Then it took off again, so I bought the RLXD at about 940. It ran up to 1050, so that's a 12% move in about 10 minutes, and I had the stop down here just below the skin of the dragon, so I got paid on that one. Then later in the day, the market was not showing much strength, but had been stabilizing, but Tilray showed no follow-through, so after as the RL270 was rolling over and it had collapsed under the VWAP, I ventured on it and got short at 940 and then covered down here at 870. So I picked up a couple pieces on this. This is going to be on my little speculative intraday stuff that's just, things get on my specials list. They come from somewhere and I study it pretty quick, and if it looks like it's tradable, I give it a try, and this is how I end up getting some things other than the large caps on there. So that's one I'm interested in. And then Ruger offered this one. It had started picking up some volume in here, gave me a Z3 pinch, and then a breakout, so I ventured at 47.5. And then later in the day, as the S&P started to roll over, this thing started rolling over, and I saw the two horns of the dragon right there at a Z3 excursion, then a fail. So I just cashed it here because I wasn't going to hold this overnight, so I cashed at the Bollinger Band mean. So this one went from 47.5 to 49.5, so that's a 5% move on about $1 risk. So that's a couple R intraday. So that's how I basically use the strategy and the framework to just quickly find things that seem to be tradable and just venture into them. All right, so this was Devon Energy. The energy sector itself was getting bashed. This one was a hybrid frog entry short when it crossed the VWAP, so short around 670. And then on this, here was a low. First surge came down, second surge on the RLCO, so I just took that one at about 650. So about 20 cents, and then a re-entry short. So these were just three little, bites. That's a couple R intraday. Let's see. This is DIA, and this was just a series. So I'm still very bullish on the Dow, and so I was looking for opportunities to see some rebounds intraday. Well, I was a little concerned because it had been a 3% gap down, and so I was thinking maybe there won't be so much runaway upside because it's been up 15% during the week. So I was not prepared to stick around too long. So these all represent bottoms in the RL10 followed by an RLXD, enter, and then sell the RLXD on the other side. And I'm only going long today. So little bite, scratch, little fraction, little bite, scratch, little bite. This ended up giving two legs up, and then in the last half hour, all of the gains that it had grinded all the way up came all the way back to the VWAP magnet, and then another leg down to close back down here. So just taking little bites when there's not a full meal. I'd like to get a sandwich. So that's what that one looked like. Today's trade. Here's the. It basically was an inside day that started and closed in a doji. So this was kind of a range compression. I take this as a, as locking in a pretty good week in the market. Like the best week since 1931. So that's pretty good. And it closed above the PSAR dot. So that'll be a PSAR flip on Monday. And it closed above the dragon. So I take that as a positive sign and an inside day. And this was just, I think, some backing and filling and people collecting the profits from this week and wanted to bank a good week. So we're very near the 10-day high. We're still right at about 30% sell-off from the previous high because we're 10, 20, 30, 40. Here's the 30-day range, so we're about a third of the way back up the stack. On the downside, I have the daily low, the skin of the dragon, Monday's open, and the RL30, which looks like it's getting ready to turn into a owl. There's one more feature. So a breakout above the high would be an owl entry on Monday, so we're going to be mindful of that one. Because here's the P1. I would call that an unambiguous move without objection, so ordered. And then here's the P1. We had the RLXD. Now the dragon just started to roll up, and the 30's about ready to roll up. So that leaves us postured for a owl opening on Monday. So that's pretty good. So then the other downsides targets. Here's the belly of the 10. And then this one was the 10 and 30-day low, and then off the chart down here would be the, there's the Z2, and then the Z3 would be right down about here. Meanwhile, the market has rolled from a long, horrible winter now into the spring. Just started into the spring, not quite into the Red River yet, but in the spring. And so we still have a short side bias, but we're prepared to take opportunities on the long side. Let's try it again. All right, I'm still on the market health check. Does anybody not see that? Okay. Other things that I'm noticing, yeah, and then on the far upside here we have the 10-day high breakout would be significant. The next one is the Bollinger Band mean and the RL90, which are pretty much in sync. Fair value is now at 312. And we have Z1, and then up here the 30-day high, which coincides with the hump of the dragon, the hump of the RL10. And then the Z3 is way off the chart. All right. Yeah. Here, this was the the trade sectors and the winners and losers today. So the S&P was down looks like 2.8, 2.9. The Dow was a little worse at 3. Japan held up pretty well, down only 0.12. Real estate, Aussie dollar, treasuries, McDonald's had some strength, Home Depot had some strength. And EFA was slightly better, but so close to the S&P that that's really the market conditions. Things that got smashed today, Boeing, and I think that's just a reflection of guys taking advantage of the gains and then wanting to make bank on that before the details of the bailout are made fully public. Brazil and Mexico gave back a lot of their gains. So again, my preference is to trade those frog champions intraday while we're in the volatile markets, and then just enjoy that. If it's lagging a little bit, the recording is coming off my primary screen, so we should be all right. Just a quick look at the here's the S&P weekly. So I just want to draw attention. Here's the weekly move that closed right at this. It closed right at resistance, which is the previous belly of the dragon around 254. So it had gone as low as we've seen as 214 and is all the way back up to in between Z3 and Z2. So it's right at a significant boundary. So we'll see what that. I think the world's going to love this week, and we'll want to do some more next week. But for a while, we were down at Z-4. On a weekly basis, we just dipped into the winter. And so this should tell us that this is not a V bottom. This is there's going to still be a lot more volatility in these next weeks and months ahead, especially as new economic reports come in, and every one of those will be an opportunity to undercut the administration's political message, while every positive spin will try to emphasize the genius in the White House. So there will be more political interpretation than economic sense being made in the next weeks and months ahead. But that just means respect the volatility. We're still more than 3 sigma on the risk Z, so there's a lot more volatility ahead. And we haven't seen the bow wave, this tidal wave of cases in the hospitals yet, so we haven't stress tested the healthcare system yet. So there's still a lot of bad news waiting to get baked into the cake. So this just shows the price ladder. This is like using the multi-time frame, multi-lens analysis at Z3, 2, 1, and 0. And then positive Z1 corresponds with the hump of the dragon and the RL10 back here at 330. So again, we just dipped into the winter. On a monthly basis, I'm on the monthly chart now. Let's see here. So the Four Seasons of MACD has rolled into the fall, still in the bottom of the Red River. So this is still, I would say the market is still hoping the long-term buy and holders, the international banks and sovereign wealth funds, are looking at this, I think, as a buying opportunity and have not panicked, and still room to the upside if they can especially build on the gains of this week. And so here's the big thick red lines are at Z-3, the fair value at 235, and then Z-2 at 245. Then the upside is Z-1 at 265. So it closed halfway between Z2 and Z1, and then you can see the other prices on the way up. So all that's still pretty good. Stand by. I'm going to see if I can't go to a faster connection. See if this thing will shift in our favor. All right, we should be on the getting ready for the portfolio speed run. You guys seeing that now? Okay. Yeah, it was shifted to the faster connection. All right, so we're on dailies now. Now, what all these little, I'm going to shift now to to the rectangles to make it a little easier to see the price levels. I mean, for me, the circles are the way I like to see them because it looks like a bullet hole when I'm taking shots. But I realize it's a little easier to see and a little easier to draw rectangles. So I've added these. Just a TC2000 technique is when you're adding things, it takes a lot of clicks. So I've just pre-positioned a lot of the standard drawing figures now. I mentioned this. I did a separate speed run, but I also wanted, since so many of you are here now, when I'm doing the speed runs intraday on the swing portfolio, and you see me I'm going to move my stop up into here. As a swing trader, you got to make a decision about how and when you want to manage those stops. If you try to manage those stops very closely, like I do, that almost requires you to be, looking at hourly or 30-minute charts periodically so that they hit, or at least you get an alert and then you can go decide. If you're doing end-of-day data, you can't really put the stops as closely as I did, or you get any kind of gap, like a 3% adverse gap today, and then all the openings will have gap down below your preferred stop, and then you got to make a decision if you want to get all out at the open, in which case you're going to gather up all your inventory and then reverse it, or you got to just take you might have to go wait and see, and then you might get a bunch of alerts and have to go manage positions, or you can't move your stops as close as I did. You got to keep it 1 or 2 ATRs away, and then only on very rare occasions will you get a gap that threatens you intraday, right? So what I typically do is I put those stop levels in there as alerts, and then I get a signal that, hey, that price alert was hit. Then I can go to the chart and then make a quick decision. And I'm accustomed to making my decisions to exit or stay in a couple seconds, based on the market read. So it really is a function of how you have structured your time. But just so you know, so I wanted to preface everything with that statement. So I'm just stalking Alcoa right now. I think I'm ready to trade this one in the following way. Hold a second. So I'm kind of demonstrating what a pain in the butt TC2000 can be. I wish I had a palette of standard things that I could just pick and choose from. So I'm going to play that breakout on Monday. I'm ready to trade in either direction in Alcoa. Apple. I took the exit here at the open because I had this is a case where, so I had moved my stop up here and then it gapped down, and I got that alert, so I just went ahead and took the exit here. Took the exit right at the open. Okay. This is the Aussie dollar, and things are okay, so I've moved my stop up and just followed it all the way up during the day. I still like that one from there. Boeing. Took the exit at the open. So we're long from 105 and 155, 153, and then took the exit a few days later at 173. So pretty happy with that one. And that's why I think Boeing got smashed so much today. It was down 10% from yesterday's close, but I think that was just guys making bank. Caterpillar. So this is one where we had two positions in. I had the stop set here, and then it gapped down. But this is one where I saw it holding support at the dragon, and this was I was about flat at this position, and then it went all the way up to the top, and then started selling off during the day. And I said, you know what? The rest of the market is very weak. I took that exit right there. So a fractional loss on the second position, but a good win on the first one, and it closed below our black line. So I will be ready to trade that some more, but it has to get above. It really has to get above that line. That's where I'm ready to trade it on Monday. Cliff kept the stop at the belly of the dragon. That's good to go. Cisco, we had two positions in, and the stop was here. It sold off. a little bit, but held above the dragon, moved to the top, and then started failing. And I just said, you know what, that's enough. I wanted to get paid on that one. Do I want to trade Cisco some more? I think so. I think I like Cisco here. I'll trade that breakout on Monday. Okay, so it looks something like that. I'll trade that. Took the exit on cut. Chevron took the exit at the open because we had 3 positions in, and it had been hammered so much that I just had to take the exit. Come on. Took the exit at the open. That's a pretty good swing. Devon Energy scratched. Emerging markets scratched. EFA made a little bit of bank, and I was just trying to minimize my exposure over the weekend. I love Japan, and so we have our 3rd position in from here, and it closed with the doji and didn't touch our exit, so I'm still in pretty good shape there. That's just my placeholder for a future one. So we're 1, 2, 3 positions in, and it closed well. I think I would add a position if it gets above the Bollinger Band mean. I like Japan. Took the exit. We had 2 scoops on Mexico and took the gap. It was a big gap down, so that was basically a scratch. We had no swing in EWZ. That was weak all day. We had 3 positions in Home Depot, a tight stop, so I took the exit at the open. Although now that I look at this thing, I would not be offended if you re-entered. So I'll trade that one on Monday like that. Russell had no swing in, and it closed pretty well. So I think I would play the range breakout on the Russell. I scratched essentially the real estate. I don't believe in it, and I think the rents are going to look pretty bad. This is McDonald's. I took the hit. It came down right to the PSAR flip, right where I said I was going to exit, and so I exited. PBW exit at the open. Silver. I'm ready to trade this one on a breakout on Monday, either on the downside or the upside. So whichever direction silver goes, I'm trading it. Took a fractional loss in SPCE, Virgin Galactic. Simon Property Group got short today. I think that's the one that's going to suffer in the economic slowdown, and a lot of smaller cap rent seekers are reflected in Simon Property Group. So this is not a case where the big corporate bailouts are going to benefit the people that are inside Simon Property Group holdings. So I think that's my favorite short right now. Treasuries, I got long on treasuries here today, so in here, and I moved my stop up to here. Tesla, I'm still long from here. I hate it, but I got my stop at the skin of the dragon, and I'll keep it there. Let's see, oil. Took the about a 0.8R loss on this one. I had my exit down here by the low of the swing low, and then tightened it up yesterday, and then just as it started selling off today, just got out. Volatility was not. This is not a volatility price pattern that would make you think more volatility is coming. This is part of a general decay in the amount of volatility. So I think good times ahead. And the fact that we got 2 dots in here on the PSAR would tell you that you should be thinking about getting short volatility, which means getting long the market. Walmart, I got long today when it crossed. It opened, went down. Then on the way up, I got in and using a 1 day low as my stop. That's what I'm trading. Got a belief in Walmart. Wheaton Precious Metals, I got short on that one today when it took out yesterday's low. Wynn Resorts, had 2 positions long and it gapped down against me. That was one I thought the bailout was going to help them. They got some money, but it wasn't impressive, so I just wanted to exit that one. That one is better for me intraday anyway, but that was a speculation. Took a fractional loss on U.S. Steel. But now I like the way it closed, so I'm going to be ready to get back in. And I'll start with an intraday hybrid frog, and I'm going to trade it with that move right there. So if it comes out above this green line, I'll buy it again at $6 with about a 50-cent, maybe a 30-cent risk. Materials. Cashed a good swing on 2 long positions. Energy, cashed the 1 position today. Financials had 2 long, and so got a fractional win on that one. It showed intraday weakness. Technology, I had 2 positions in. It was starting to sell off, so I got out of that one. This is one I think is going to benefit from the bailout, though. All right, so I'm ready to trade this one on Monday like this. If it gets out of that box, I'll trade it with a stop here. So that's what I'm looking at. I'm looking at a trade frame like that. Okay. Healthcare had 2 positions long. Basically scratched the second one to raise some cash. So that's our speed run. There was a good psychological lesson learned. So I've started building out the on the Talent LMS. So the psychological lessons are getting built out in there. I posted one on Patreon, reinforced the owl meditation, and then one on about juggling and handling snakes to deal with anxiety. And that has to do with pulling triggers, and that's when your rational mind wants to trade, but your inner voice doesn't want to let you trade. And there was about a 15-minute video posted on Patreon that I thought was really pretty good. So I would encourage you guys to take a look at that. So that's everything I wanted to cover tonight, sort of the closure to the week. I will do a narrative of the weekend reports and another forward-looking strategy after I've had a chance to digest a little bit. I will get that posted tomorrow at this time. But that's everything I wanted to cover for tonight, so thanks for hanging in with me, and I'll get this thing published and cleaned up for you to review later tonight. Any final questions before we get on back to work? Seeing none, I will just say, hang in there, guys. Good to see you all. Keep working hard. Keep the faith. We'll get through this. Take good care.